rise and markets fall. Atomcash is ready to answer the call while the bulls charge hard and the bears dig deep. The angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. Now, today we have an exhilarating lineup of segments to give you all as much information as quickly as possible, as per usual. Today, we had PPI come pre-market. We've got OPEX on the horizon. Trump speaking with Russia. There's a lot going on right now, and how can you best be prepared for it all? Well, we're going to talk you through it all today in preparation for tomorrow and the start of next week, more importantly. And we had a very interesting day yesterday as well, so there's quite a lot to talk about. So as we normally do, before we get too deep in the weeds, we're going to look at our Catalyst Watch for the week this week and see what we have to keep an eye on for today and tomorrow. Now, obviously, like I said, we already had jobless claims and PPI pre-market, so you're seeing the effect on the market right now from that data. A little bit of a markdown off of that data reaction as it sits right now. Now, for the rest of the day, Trump is scheduled to deliver remarks around 1 o'clock, so definitely keep that on your radar. And then you got Barkin, as I alluded to earlier this week, at 2. But outside of that, for the rest of the day, it's looking like it's going to be a pretty clean day in terms of any potential landmines. That 1 o'clock thing is going to be the big thing to keep an eye out for, especially with everything surrounding the whole Russia war thing, which is still, as I've said before, I think the market's caring less and less about this, but it's still something that's floating around out there, so it's still something maybe you want to keep on your radar, especially if you're day trading, intraday trading today, especially where we're sitting on the chart, which we'll get to momentarily. Now, as we fast forward to tomorrow, the biggest thing you want to be mindful about for tomorrow is OPEX. OPEX. It's options expiration. Typically, that leads to more volatility or lack thereof. I know it sounds crazy. It sounds a little furu-y. Hey, things might get crazy and things may not. But it really honestly depends. We can take that kind of like day by day. And as I've said to the members in our community over at Exclusive Trading, which if you want to learn more about, check out the link in my bio. This market, the way it's sitting right now, is a very day-by-day market, and I'm going to talk about the chart here again in a little bit once we get through our Catalyst Watch, but I'm going to tell you exactly why, so stay tuned for that. As it pertains to Friday specifically, not too much coming down the pike. You do have retail sales as well as Michigan sentiment, which you guys know I love to trade Michigan sentiment if the opportunity presents itself to be risk-free in that environment, so be mindful of that. Always having a position beforehand, going risk-free into it. You typically get a point or two, specifically on the IWM. Typically. So if the opportunity presents itself, that could be a great trade setup for you tomorrow. And then I guess the official meeting with Trump and Putin is tomorrow, but today we're kind of like prefacing it, so I guess we'll see about that. Now, let's roll into the actual market and take a look at what we might have missed while we weren't live this week. So the market's been grinding up. We saw a nice little push here on Thursday, and I'll tell you guys a quick little story. I was actually short during this push, believe it or not. Yeah, and I had a bad trade. I was short, didn't work out for me. However, moving into the next day, I doubled down. If you're in our community, you saw this happen. I actually opened a short, literally like here, and I closed the short. Let me get my doodles back on my chart, right at that old all-time high, right down here, essentially. So, made back a lot of my money on that move. It worked out very nicely. Actually, I ended up netting a profit over the two trades. The point I'm trying to make here is, don't ever, especially in this environment, make yourself feel like your system's working against you. For me personally, this is a trade I would take in like 10 out of 10 times on a short side trade. But in this scenario, it just didn't work out. And same exact setup happened for me personally. Yesterday, took it, worked out, made my money back on the trade I lost, and made more money. So I had a 15-minute diatribe about trusting your system. When you have something that works and it works consistently, like for me personally, I have about a 90-something% success rate on my trades. That means I have something that works, right? So the 10% of the time it doesn't, don't let that diminish your belief in your own system if you've developed something. So that's just something keep in the back of your heads for you, right? Something that when you find something that works for you personally, you're going to hit points where they're going to be lost. It's the stock market. It's inevitable. What matters is that you stick with what works because you know it works, and statistically it works. How you become successful longer term is actually controlling the times where you're wrong. Not how many times you're right or how much money you make. It's controlling when you're wrong. And if you can control when you're wrong, you're going to be successful. That's why you'll see a lot of people talk about having like a 2-to-1 risk to reward. And even if you win, like you have a 60% win rate, you could be a successful trader. It's just people blow up on those lower, the bad part of the success rate of trading. And that's how they get it's how they eventually blow up. So anyway, we saw a nice move up. We're getting a move down now in pre-market. Now we're sitting on this Thursday high, and that's why I was alluding to it, because what we could see here is a evening star on the daily. So what that means is you get a push up, so a green bar here. You get kind of like a doji candle. So price actually moved up, actually moved down. We basically closed right around the same spot. That's kind of what this candle is indicative of. And then you get a sell-off candle today. That would be indicative of a trend reversal on the daily. So you're going to want to watch out for that today specifically. So if bears can push this down to all the way down, like about 4 points from pre-market open, if we open here, you might have an evening star confirmed reversal here on the SPY. And as you guys know, if you've been watching the program, not that I'm bearish on the SPY, which I guess technically short-term bearish, but I do see us getting back down in this little range here, or maybe even a little lower, before end of September, which at this point would be a little bit of an aggressive drop because we're talking 6 weeks. So, anything's possible, but that would be a little too aggressive. But getting a deeper drawback, especially lower than this August low here, is what I'm personally looking for before going long. I have a whole video on that on SPY to 700. That's on my channel. It's the third most recent upload. So if you haven't checked that out, go check that out. That'll give you a whole idea of what I'm looking for here. Now, I'm going to talk about the IWM, but before I talk about the IWM, guys, we got 5 minutes till market opens. I plug this twice a show. I'm going to ask you once now, wherever you are watching in the entire world on any sort of social media channel, do me a quick favor, interact with the stream, say good morning to me in the chat, like it, subscribe, share it, follow me, whatever it may be, any little bit of interaction. That's all I ask for you guys for this stream. It's free, I don't want anything else, just some level of interaction. The algorithm loves it, and I appreciate your support. And again, once we get to 500 subscribers over on YouTube, this is going to be a daily show every single day. So if you like what you're seeing here, you want to see more content, please do me a quick favor, pop over to that YouTube channel and hit subscribe. Now, speaking about the IWM, nice high volume break here. And you guys know I'm very bullish on the IWM, assuming we're holding this GP level, which we back tested a little funky there for a minute. And last time we streamed, I said it's very interesting. We're consolidating here. Now, we had a hard break. Getting over and staying over 229.42 can lead to about a 10-point markup. All the way to 242.39. Big opportunity here. However, I don't think that's going to happen yet. And actually, I prefer that doesn't happen yet. I'd prefer that we came back down and back tested around 225.72 or even a little lower before this gets a hard push here. Now, my concern here, and this is what you really need to know, IWM typically pushes very hard, and you can go back and fact check me if you don't believe me, when the market has some level of a retracement. And by a retracement, I mean, I'm sorry, not a retracement, when the Fed cuts rates. Sorry, got my head mangled up there for a sec. When the Fed cuts rates, IWM typically has a harsh reaction due to the fact that when we're in a rising rate environment and rates are cut, that tends to benefit the stock market in general. It tends to benefit those smaller companies that need to borrow money, and when they borrow money, or when they can borrow money for cheaper, that lowers their expenses. They're more successful or higher chance of making money as a result. Smaller cap companies that tend to borrow money are more bullish, right? Just quick little synopsis. What I'm concerned of is that as of yesterday, and this has actually just changed this morning while we were live, or like right before I went live, there was a 100% chance, at least I should say, traders were betting on a 100% chance of the Fed cutting rates in September at least 25 basis points. That has now changed as of this PPI result this morning. Seeing that number hit 100%, seeing that the market was literally guaranteed, according to how people were betting on the market, were guaranteed, futures traders were guaranteeing a price cut, could have been enough to front run that move. This is part of my concern, and I put a little post about it over on X last night. Part of my concern with this move is this could be front running, and if when we get a cut in September, if we do get a cut in September, we could see a unprecedented lack of reaction or even a bearish reaction if the move already occurs. If we already get a hard price expansion, I want to say, a quick, fast move on IWM prior to that official cut would be very concerning to me. So I really would prefer we actually stay lower right now. That would support my thesis of getting SPY to draw down. The Qs are pretty similar to SPY, but that would support my thesis on getting a little bit more of a bear retracement on SPY prior to those rate cuts and pushing into the end of the year. So that's kind of what I'm looking for here on IWM. I actually do want it to come down a bit. I do want to talk about a few other names. The market's going to open here in just a minute. So we're going to keep an eye on things as the market opens. And as per usual, if there's an opportunity to take a trade, we'll do it. Today is Thursday Ticker Takedown. So we're going to look at some specific stocks or go over some specific stocks. If you guys have any you want to drop in the chat, feel free to. I do want to go over some of our names, which are now all red, unfortunately, in this pre-market move. But if you're part of the Big Money Monday Club, that Monday show, I put a post on X. All of them performed great already. Now, again, these are more longer term outlets, but everything already performed pretty decently off the back of our Big Money Monday show. So hopefully you guys were able to take advantage of that, or at least consider some of those positions potentially. All right, market's going to open here in just a few seconds. There we go. Sorry, I'm just moving a stop up on an open order. Yesterday, I opened equity longs and DLO pre-earnings. So I'm just placing a new order on that. Here's DLO, which actually I might stop out of already or realize profits here. Because that was a pretty quick move on DLO off their earnings. Pretty decent earnings if you have exposure to DLO. Let's see. Oh, didn't take my order. No. I'm gonna hop. Stop order. 1339. All right, there we go. Stops are on. Let me just update this for the Discord. Reminder. All right. Sorry about that, guys. Just had to move my stop up. We hit. So again, just to reiterate on this little trade here, I got into DLO yesterday. Here are all my price targets. My stretch price targets are here. So got in at 1160 or just shy of 11. Well, hold on, I'll tell you exactly where I got in. Got in at 1154 and 1150 on my other account. Blasted through 1, 2, 3, 4, 5 price targets. Great earnings. Here's my 2 stretch targets. So if you have exposure to DLO for whatever reason, this is what I'm doing. I'm rocking a 1339 stop loss on this right now, which will give me roughly about like 17 to 20%. Overnight on equity, beautiful. Can't be mad about that. All right, let's get into the market. Let's see where things are going, because I'm sure it's going to be a busy one today. Currently rejecting that Thursday pre-market high. So remember, this isn't yesterday's pre-market high. I'm sorry, Tuesday. This is not yesterday's pre-market high, the prior day's pre-market high, which served as support yesterday. So we go back to yesterday. You could see that was actually like the low of the day where it served as support. So sitting where we're sitting now, see if this turns into a resistance level on the day, or at least I should say intraday. Now, be mindful again, we do have that Trump catalyst at 1 o'clock today. As it sits right now, I wouldn't necessarily be rushing this too hard on this open. We're going to check our sectors here in a moment too. Tech looks a little resilient, and theoretically, small cap should be bearish, but you're already down 1 1/3% here versus SPY's 0.3. So you're already gapping much lower than the market as a whole. So this might be enough to satiate bears on a decent gap down on IWM. And again, to reiterate, I would prefer we go lower on IWM here near term. Watch this gap to fill intraday today potentially. That would be 226.98. So about a $2 drawdown here on IWM, still a possibility intraday. That would fill your gap from Tuesday to the downside. So we can see how that works out. We'll keep an eye on that, because that actually, I like that trade a lot. It's crazy because we're already down 1%. But just because things are red, and this is why I don't like how people say RSI is overbought, oversold. Just because things are down or just because things are up more doesn't mean they can't go up more or can't go down more, right? They can always get more of something. That's why I don't like when people use the words overbought, oversold. It can always get worse or better. Always. We'll check out the VIX here. VIX sitting around 1522, 1513-ish. Getting a little bit of a bounce here. Basically, this 15 level is very sticky. Ever since Trump took office, around this 15 area is really where your lows tend to hug around VIX. Every time we've gotten down there, you've gotten some level of a reversal or something like that, for the most part. And where's Trump taking office? Somewhere in here. We don't really sink lower than like 14.5, 14.25 before getting some level of a move to the upside here on VIX. Again, you don't believe me, pull it up on your own chart. So seeing a more bullish VIX today isn't really surprising. It really, like, if you want to use the words overbought, oversold, volatility is oversold near term, right? Which makes sense, correlates with the market moving up pretty starkly, pretty quickly. So getting some sort of a bear side trade here would be very interesting. What I want to watch for on the SPY, where are we at right now? 640, basically 642.50. Is that really where we are? Yeah. All right, so here's what I'm gonna do. Actually, I might long it right now. I'm going to do 1 DTs, though. We're going to look at... I'm going to wait, actually. But I will put it on watch. We'll do the 640... I'll keep an eye on the 643s for tomorrow. Now, these look like they have elevated IV without me even... Let's check. 14%. So that's actually not elevated. Let's check our zeros, actually, real quick. It's always open me at the top of the chain. 0 DTE IV. A little hot. 17%. Makes sense. We gap down a little bit off the PPI data. We're going to add this 643... 43 call position on watch, not in it yet. What I want to keep on watch is we might come up and sweep the 200 MA or just shy of this area. Like probably this right here, the high of this candle, 643.47, before coming back down and testing basically POC and the lows. If we get that back test, then I'd consider calls with a tight stop. Assuming those hold, assuming I'd basically be willing to risk like 642.14-ish, maybe 642 even. So about 50 cents or so to the downside. Assuming that holds and assuming that doesn't break, we should have some level of a reversal here. But if it breaks, I want to flip to a bear very quickly. So let me restate the trade plan again. Again, this is what we call in our community, or I call going fishing, where I set up a specific trade plan. If this, then this, right? If we back test, we sweep a little higher to like 41, 47-ish cents, maybe even tap the 200, depending on how long it takes to get there. Sweep that area, come back down to 642.50. There, I would look for a long with about 50 cents a rope or so, willing to give it room. If that breaks, that risk breaks, I want to close out my call position and flip bear side very quickly. So the market wants to go up. Off this news, it's reacting, right? Shaky, getting a little bit of drawdown. But because of how the daily chart's sitting, right, and that potential is there, and the potential is there on IWM, I want to be very careful on a call side trade and be more prepared for a bear trade if it happens. But I will say, because this pre-market, look at the POC here, this green dotted line. This is where there's a lot of support pre-market. It's where the most volume's traded. We supported it at open, so I'm willing to risk that level, get in at that level, and see if there's a reversal there. If the bulls can't defend it, then I want to flip bear very quickly. So there's the trade plan on SPY. That's what I'm going to be watching for as like basically the only trade I'm willing to take. If that fails, then I want to look at, I'd prefer doing 0 days, to be honest with you guys, on a put trade. And it might sound crazy, but I was going to say it's a little out the money. I was going to say 640s. I'll keep an eye on the 642 zeros. And that will be my what I'll watch for a bear side trade. Well, at that point, we're at 642. So actually, we'll go one strikeout. It would be 641s at that point, actually. Because I'm assuming the drawdown first. So we'll look at 641s. That puts me about $1.50 out the money on those zeros if we get that tap. And I don't want to short this move down, to be clear, because this is bullish for now. It's just I would feel more comfortable letting liquidity get swept a bit before establishing a long down here. So I don't necessarily want to ride a short. Could take a quick short here if I really wanted to. But to be honest, it's a little ballsy. So I don't really want to. I would rather wait for now and see how this may work out. But overall, you got good risk either. Like you can make money either way on today. Assuming by like 10 o'clock we get a push here, one way or the other. And I doubt we're going to fart around in a tight range before Trump speaks. It's a possibility, but I would put that in like a 20 percentile, like a lower possibility. I'll look around the market real quick. Nvidia's looking okay. It's looking a little tired up here on the daily chart. Get very wicky up here near the all-time highs. Again, you guys know I would want and anticipate a drawdown before earnings, because that without a drawdown before earnings, that puts that expectation much higher. So at least if it pulls back a bit, the evaluation cools, right? So it's not as expensive before going into earnings. So maybe the expectations be a little less dramatic, which would be better. Meta sitting at that key level. Remember I said that 777 number. We did break all-time highs on Meta again yesterday. But basically right here, 775 to 777-ish, right around here, is where, if you're a bull on Meta, you want to see it hold. So you're testing that right now. The daily doesn't look fantastic. We are supporting the EMA, so as long as this support kind of holds, as long as we're above that 775 area, it still favors the bulls. But it just takes one decent sell to get out of this range and have a pretty decent pullback on Meta. Keep an eye on the SPY here. Let me type this out so it's ready. SPY tomorrow, 6:43, calls at whatever it will be. Back testing Thursday's all-time high right now. Could take a long there too. Remember that was yesterday's support level. this morning's resistance, breaking it as support again, back testing it, could be support once more, which is looking like what the bulls are trying to do here. I just think it comes back one more time down here, this POC-ish area, low a day area, 50 MA, which really isn't a far cry. This is 70 cents from here, so it's not even like a big move. It would just give me a better entry specifically on contracts, which is what matters most. Alrighty. How's my D-low doing? Hey, let's go D-low. Alibaba's got earnings tomorrow, I believe, right? Or tonight, tomorrow. It depends because I know they're Chinese, obviously. SEMR, remember we talked about that on Monday. Still solid risk to reward here. First little tap, we almost got my first price target. And remember, my first price target still gives you 2-to-1 risk to return ratio, assuming a 728 entry or above my entry, to be fair. And it's not out of the woods by any means, but again, you're risking all-time lows. Wick, as we talked about. Very interesting setup here from a risk standpoint. I'll be honest, Tenable I got stopped out on. It sucked, but I did get stopped on Tenable, and it ended up moving afterwards. So it is what it is. If we get a little bit of a back test, we get back to this like 29.50, 29.50, or 29.25 area, I may re-enter on Tenable. And I'm still watching Peloton. Sweet spot for a re-entry for me, because I was already long this name. I closed out my longs right around this 761 to 784 area. So that's where I'm looking to open my new longs on Peloton for another move. And the SPY's not doing too much. Let's check our sectors real quick. Let's see what's going on. Ooh, all right, well, that was easy. Red. I guess that's to be expected with the gap down and PPI data. Let's see if anyone's starting to reverse trend, though. Energy selling off, continuing to sell off after the open. XOU pretty flat after the open. Consumer staples selling off after the open makes sense off of PPI data. Tech is rallying, actually, so you're actually seeing risk-on behavior, which I guess makes sense when you understand what PPI data is. So seeing money flow out of energy and consumer staples isn't necessarily shocking, and then into growth, more, I guess, understandable. Real estate down a bit here. It's continuing to move lower into the session. Materials continuing to move lower into the session. Industrials flat after the gap down. Healthcare moving lower into the session. Financials and tech so far are the only ones. You see, yeah. Everything else is still trending pretty bearishly. But finances and tech seem to be trying to hold the ship afloat. So the more favorable trade is going to be the bear trade. Still. But as long as that level holds, it's bullish. Which puts me in a very interesting boat because I prefer to take a bear trade 9 times out of 10. If we reject... We did sweep it. I said I wanted to sweep, what, 4-7? We swept 4-5 on SPY. I actually might go bear here. Gonna give it another minute. Watching the 641 puts. For today. Okay, here's where I was looking. And we pushed a tiny bit higher. It's sketchy. I'm going to take a stab here. I'm going to get it on the 641 puts right here. I'm loading here. All right, the 641's at 55 cents. First trim will be at this Thursday high, especially with it being a 0. I'll risk the 200 MA here. So pretty tight risk to reward. I'm risking about 30 cents upside and about 50 cents downside for my first trim. So pretty solid risk to reward there. Already at 60. Again, that was the 641, so it's at the top of the chain here. 641s for 55 cents. Now, again, if this breaks, my next price target, look for the 50 MA, and that's 6.4 sorry, 642.50 area as my second take profit. And if that goes, 640 is actually realistic today based on the daily chart. What gives me a little bit more confidence in a bear side trade, especially on a zero here, is the fact that our sectors are all still trending, for the most part, all trending down pretty aggressively. Tech is really holding it up right now. It is really the only bullish sector. Industrials maybe a little bit here. You got some volume there. Everything else as a whole, and finances are just kind of whatever. Everything else as a whole is mostly like aggressively bearish and continuing to be bearish. We're back at my entry here. We'll see, we'll see, we'll see. It is also a little out the money, but if it works out, if these two levels break, it will have a sharper drawdown, I should say, on the market as a whole, which I'd prefer to have that IV expansion on a 641 on a 0 day where I'm out of the money just a bit, where I can kind of capture some of that extra, I guess, as we move towards getting intrinsic value, because it's still extrinsic value, obviously, but as we move towards potentially getting intrinsic value, I could capture some of that volatility in the meanwhile. Yeah, Qs are holding it up right now. Yeah, and IWM on support here. Watch this break here on IWM. Again, watch that gap fill. That's what I highlighted earlier at the beginning of the stream. 226.98. So about a buck on IWM here to the downside if this breaks. That will probably happen very quickly. If that happens, the Qs have been strong from the open, so that could be enough to spook sentiment. And if we get some bear action here on tech, that's going to obviously pull down SPY. You're going to get a double whammy. IWM's already pushing down, and if the strength gets weak, so we see some strength come out of the Qs, then you're going to have a deeper pull down on SPY because you're going to get hit from both sides, both the tech and the small cap sentiment side of things, essentially. Volatility is moving lower, though, so this does still favor the bulls. And like I said, this is a little bit of a ballsy trade because above this 642.50 and the 642.84, the market should be bullish. So I'm kind of going against my own analysis here a little bit. But I wouldn't if I didn't think it would make sense. Yeah, the Mag 7. So this is also something I spoke about yesterday. We saw the Mag 7 retreat a bit yesterday as we saw small caps move up. And now you might be actually seeing part of the reason why tech is up today is some of that money that rotated out in fear is rotating back into tech, ironically, for safety. So we'll see if that holds true, or if tech ends up getting spooked here very soon, especially with IWM potentially drawing lower. So that will be to be seen here momentarily. Very momentarily, I believe. Like 10 minutes or so. We will see. Guys, if there's any stocks you want me to take a quick look at, feel free to drop them in the chat. It's kind of what we're going to do here on ticker Thursday ticker takedown. If there's any tickers you guys want to share with me, feel free to drop them in the chat. We will take a peek. Sorry if my brain seems a little slow today. I'm exhausted. The energy might be a little lower. I'm a little tired today, but I'll try to pick it up. All right, Q's still pushing here. Basically, I've been pushing since the open, trying to take back the entire PPI move. SPY lagging behind. Here's basically my risk. So we're at the 200 MA on the 1 minute. Surprisingly, these contracts are actually holding their value pretty decently for being like $3 out the money on a 0 day. I'm actually kind of surprised they're holding as much value as they are right now. The Qs just went green. We'll give it another minute or two just to see if bulls can break over it. And if they get a confirmed break, I'll close out and take my loss on this put trade. Which, just so you guys are aware, hold on, I didn't update my let me update my sheet after yesterday. It's another one. 1, 4. On the year, for every single short trade that I've alerted, specifically on the indexes, I've alerted 114, 104 of which have all been profitable. So I've missed 10. What's that make me? What's that give me? 114 by 104. 90. No, that can't be right. 104, 114. I did the math backwards. 91.22% hit rate on index shorts. Call me Michael Burry. Don't call me that. I don't want to be that guy. So like I said, I'm being patient on this. We're going to give it a few, like 2-3 minutes here, see if the Bulls can actually get a confirmed break over this 200. And again, this is all strength on the Qs. IWM is getting a little bit of defense here off of that 227.75 area, which you're obviously going to want to see if you're a bull. IV is going, or I'm sorry, VIX is going down a bit. NVIDIA moving up pretty decently. It's starting to get into this territory again of where it's left a wick every single time. Basically, what's the high of this candle? 183.30. Put a line on your chart there. Right in that neighborhood there. And look, I drew a line there. Ever since we hit that high, so this is the high in 731, so really the end of the month candle high, it's been treated as a pretty harsh resistance up here. Wick, 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 wick. We're not there yet today, but this isn't boding well for NVIDIA near term. And again, I would prefer to get a drawdown on an NVIDIA near term. Like again, 170, 175-ish at least. So if for whatever reason we come up here and tap it again, it wouldn't shock me that it would get rejected again. As I'm talking bad about NVIDIA, whoops. This is why, so we'll see if I'm right still, because we don't know if I'm right still, right? I'm still right on the trade for now. This is why when I hit my risk level, I always give it time and I watch volume. So volume technically did increase. As you can see your VMA here, the blue line down here. Volume did increase on this push up, but we didn't have necessarily what I like to look at for follow through. Higher volume, a break, and more volume, like even more dramatically higher volume. That means I need to get the hell out of the way. If we get a rejection candle like this and then we kind of float here for a minute, that will be a trend reversal back down to the downside. So whenever I'm like at my risk level, I like to play things very close to the vest where I be patient and understand that like this might be where I need to say this is a losing trade, or I need to say, okay, now or never. And this is where I'm saying, like for the Bears, okay, now or never. You either reverse this now or it's a losing trade, essentially. That's kind of what we're waiting for here. I personally, so as you're watching this program, I like using the 1 minute candles. A lot of people don't like using the 1 minute candles because it gives you too much information or whatever. I like that. When you look at the 5 minute here, like you could say this is a giant reversal candle now, right? But for me, that gives me too little information too late, right? So that's why I like looking at the 1 minute candle. I can break it down and not freak out when I see a move like this. By the way, those contracts are now green. I don't need to freak out because I understand I'm looking at a shorter time frame. Now, again, if you want like crack, you can look at the 5 second, or actually I think I have a 1 second. I do. You can look at the 1 second chart. And here, we'll just look at this just for a second. I think I did this on a stream earlier, but look at the 1 second chart just for a little bit, and you'll see when you get a quick drawdown, it's this will drive you insane. So if you really, really, really want to torture yourself and mess with your own emotions, you can put on the 1 second chart and watch that for a little bit. There's people who trade this. If you're trading like a 0 DT at the end of the day, sometimes I'll actually use the 1 or the 5 second. That's because that's so time sensitive that you got to really stare at like basically each tick. Right? But we're not at that point right now. So we go back to the 1 minute. And here we are sitting at the POC right here. And basically the entry on my contract, I have a 55-cent average. You're going to want to see this POC break. Now the 50 MA has moved up. So essentially breaking below that Thursday low here should lead to a pretty stark reversal to the downside. assuming we break low a day as well. So still same price targets essentially. Thursday high and the low a day. The two things you should watch out for on this move here. They're wicking here off of the POC, so that's a good defense for the bulls. So the most volume of the day by price was traded right here. We moved down to it, wicked above it. Next 1 minute candle wicking it again. So it's showing that buyers are stepping back in at this point of the day. It's where the most liquidity is traded in the day thus far, excluding pre-market trading. So that's where bulls are going to step back in. They're going to attempt to bounce it here. What you want to watch as a bear, in this case I'm a bear, let it come back up to the 200, reject lower. So you'll put in a lower high, go back to this POC, break it, and start to melt. That's kind of what I'm calling for here on the SPY. And if you look at these two 5-minute candles the way they're sitting right now, this is called indecision. Big wick to the upside, big wick to the downside, and basically tiny bodies. The market doesn't know what it wants to do right here specifically. But the way it's leaning right now is more bearish than bullish. Assuming we don't break, again, my risk and move with hard volume. So we'll come back and keep an eye on that. And like I said, when the Q's caught a rejection, you're going to push lower here. We didn't even see IWM sweep lower yet either. And like I said, IWM should at least have another dollar in it to the downside. Essentially, you can watch the 200 MA. You got the 200 and the VWAP right here on the Qs. Call it 579.50 just for simplicity's sake. If you break under that, you're probably going to get a pretty good sweep there on the Qs. Volatility trying to round a corner here. Your VVIX is also moving up a little bit more, so that could be indicative of a higher potential for volatility to reverse potentially. UVXY copying VIX. Good to see if you're a medium-term trader. NVIDIA made the high, trying to come back up. Similar positioning to the Qs, where the 200 and VWAP are sitting, serving as support there. Meta so far has been holding above that level I told you guys to keep an eye on. Microsoft looks so sketch. So sketch. So put in perspective for you guys. Microsoft and NVIDIA make 15% up of the SPY. I know we talked about the Mag 7 making up 35%. 15% of the entire S&P 500 is Microsoft and NVIDIA. So if you're not watching just these two names in the day and you are someone who trades SPY, you're probably going to have a bad time because you're not going to be aware of how these two individual names can be and may be moving, because that's going to have a big effect on the overall market as a whole. Think about it this way. If both of these names move down, okay, now I got to do math for you guys. If both of them move down, 5%, that would mean the market alone would drop at least 1%, 1.25%. Someone can fact check me. Something like that. The market alone, so the whole S&P 500 would lose, in this case, around $6.50 if NVIDIA and Microsoft move down 5%. Now, that's a hard fall, don't get me wrong. I'm just trying to make a point of saying those two companies, if they see some bearish flow right away or some bearish price action, would affect the market as a whole. And as you're seeing right now, they're trying to catch a bid here on both of them, and the market should be up. Yep. The market's trying to power through this resistance point. It's 200 MA here. And you have the red star here as well. So if we break this high, I'll take a walk. I'll call it a loss. I don't know. I don't want to. Yeah, we'll say the high. If it breaks high a day, I'll take a walk. I'll take a walk. I don't think it's going to, though. I don't think it will. Really, really don't think it will. How's our Google doing? Google's been performing pretty well. Ever since it broke that 197, we got that mark up to the gap fill I told you guys about, up to the 202 area, 202.58. Kind of floating around there right now, but again, this is kind of your indicator for like where the bulls should be sitting in the Mag 7. It is starting to get a little tired, though. It is on a hard move. Look at the weekly. Look at the MACD. Volume's been solid. Hard move. I think it needs some... is this all-time highs? Yeah, we're right there. It should have some level of contrition. It should have some level of cool down here sooner than later. That being said, the monthly, look at the volume. Last 4 months, pretty high, which makes sense because it was discounted, right? Moved up, so people are buying on the dip. MACD is starting to flip. You have good momentum on the monthly. Could break all-time highs. Very likely could. Watch the SPY to put in a lower high here. If this takes too much longer, so if we get to like 10:10, I'll probably roll out to a 1 DTE just to give myself some flexibility here on timing, because I don't want to lose due to theta decay if we're not moving down fast enough. So if we still bearish and I get back to around my entry, I'll probably roll to a 1 DTE unless we just melt down, or I can safely ride it. So just to de-risk just a little bit, because this is taking a little longer than I anticipated. It's a little slow. Where was I at? Amazon. It's getting a little frothy up here. And Tesla, did we break out yet? We tried. If you want to draw your pendant, those of you that like shapes. Tesla tried to make a breakout. It's kind of back testing it right now. So it's back testing that old high area. So if you're a bull, you kind of want it to rally here in the next like 3 to 5 days. The way it's set up though, and I believe I said this on Monday's program, the way Tesla's set up, if it can't, like basically 331.89, if that doesn't serve as support, this can get really heavy very quickly. Based on the daily, based on the weekly, and based on the monthly. All three are sitting at a point of, if it doesn't move quickly, the bears are going to pile on Tesla hard. So you're going to want to be very careful on Tesla. Again, my price target for longs is around 220. That's where I would personally look to do equity longs on Tesla. Yeah. We'll even move it up to like this 227, 230 area, down to 212.64. That's where I'd start loading longs on Tesla. I know, scary, but that's just how I see it. All right, SPY kind of fluttering around up here. The Qs are looking a little weaker, and ironically, IWM's trying to get its act together. Trying to. We will see if it does. Let's see what else we got going on here. Let's check out our sectors real quick, see if anything's changed. Utilities starting to recover. Energy trying to recover. Staples trying to recover. Tech is ironically shakier now than it was before. It looks like everything's trying to catch a bounce now. Trying to catch a bounce. With the exception of comm services. Looks like everything else is trying to catch a bounce here. We just broke the red SAR here on the 1 minute. So that should, you have your MACD starting to try to flip here on the 1 minute. The bulls, if they push it like now, they can get it. If they can't, the way that the 2 and the 3 and the 5 are all sitting, is it's going to pull back. In fact, I'll put my money where my mouth is. You want to see? Let's do it again. I'm going to buy the 1 DTEs now, because now my risk is even tighter. Do 642s. All right, I'm looking at the 642s for tomorrow. Puts. I'm loading some of those. All right. Long some 642 puts for tomorrow at $1.25. It's rare that I open up a double short. But the way that this is sitting across all time frames, as long as that high doesn't break, if that high breaks, it's invalidated. And it's tight. Like, it's got to go now, and if it doesn't go, both of these are going to pay. But this also positions me in the sense that when that 0 DTE does come down, I can even de-risk, close out of it, and ride the 1 DTE with a lower risk. Obviously, the 1 DTE also has time, and it's actually closer to the money, too. And again, why I went 641s on the 0 kind of gives me that IV expansion opportunity where if we do have a harder, quicker fall, this is going to get jacked up in premium price, which is what I want as a day trader. I want to take advantage of the Greeks, not be a victim of the Greeks. Yeah, if it can not if it just stays under that high, I'm very, 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 very confident that both of these are going to pay. Very confident. Let me actually write something down real quick before I forget. What is it? 8, 14. You might be wondering what I'm doing right now. Well, I'm updating my trade log. And that's something you guys should do too. Make a log of all the trades you make. That way you can be cognizant and also hold yourself accountable when you do something right and do something wrong. Take notes, write what you did good, write what you did bad. Especially when you do something bad. Or maybe you didn't do anything wrong at all. It's good to at least have that little reference. That way you can always go back to it and say like, oh, this is what I did right, this is what I did wrong. What works, what doesn't work, and then you can kind of refine your system more and more and more and more. Ooh, this is a battle up here, boys. Boys and girls, ladies and gents, this is a battle up here. It is a battle. Okay, IWM looks like it's going to pull back lower. Qs are starting to pull. VVIX is moving lower while we're seeing volatility try to bottom out. Except, I guess, UVXY is not moving lower. VIX is flat. This is tricky. Tricky, tricky. NVIDIA at the POC trying to push here. Get rid of this because that's going to confuse me. There we go. We're at that high, like right now. We're right there. All right, we broke it by a few pennies. I'm going to give it a little bit of leeway. Like I said before this happened, we give it a little bit of leeway. Just a little rope. Not enough to hang yourself, but enough to make like a nice little knot. Just a little bit. Meta breaks here, you're going to get pushed to low a day. Microsoft's a little shaky here. Google retreating. Apple does not look good, actually. The dailies have a much different story, but this could use a down day, to be fair. This is a pretty harsh move. This could use some level of a retracement, a cool off here. How's our Amazon looking? Yep, Amazon coming down. This is why we wait. This is the same lesson twice now. Where it broke my risk and I'm like, okay, wait a minute or two. Because you could get wicked out of your position. That's why I wait. And it's rare that I have high enough confidence where I'm taking a double short. But this is why I'm waiting. I still believe this is going to work out in my favor here. This whole stream is going to be me taking one SPY trade, apparently. Or two, technically. That's the whole stream, is me talking through a SPY trade. So hopefully you guys find some value in it. And if you do me a favor. Interact with the stream, drop. It's very quiet in the chat today. Normally I get a little bit more than this. So if you guys want to say something in the chat, or if there's something else you want me to talk about, or if you have questions, feel free to drop them while we're waiting to see if this trade plays out. Feel free to talk about subjects or stocks. Feel free to drop them in the chat right now while we sit on the precipice of destruction. Ooh, that's a good name. The precipice of destruction. We're on the edge here, literally right on the edge of risk. The longer it stays under this level, the higher probability it pulls back. The longer it can't break, the higher probability this reverses, and actually reverses harder. Think of a lowercase n. Now, if the bulls push it here and they break it, it's dead. But if it can't, it will go down. NVIDIA looking like a flat top breakout. That is one of my favorite setups. Is a flat top breakout. I'm assuming you mean on the daily. Or you could mean today. I wouldn't really call this a flat top breakout. I mean, I see kind of what you're looking at here if you're looking at the daily. Yeah, kind of. I would more look at this as just respecting your 8 EMA and your 13 EMA on the daily. I wouldn't read too like as a flat top breakout. I would actually, because it's been on such a move here, this could be actually a point of where it does get a level of retracement as I've been kind of alluding to. So I wouldn't really look in this particular scenario as like a flat top breakout. I can show you a flat top breakout. 3-minute candles. Okay, so that changes things. Okay, better. Yeah, higher lows. If you want to use your top essentially as 182.03, yeah, could. But what I would look at is here's what I would do. If you like that idea as a long, you could risk the AEMA. So even if you got in like literally right now as I'm talking about it, that could be your stop. You have pretty tight risk to reward here. Your flat top being 182, your entry being around like 180 with a tight stop at like 180, 175. Like tight, right? This has to be a tight stop. Your MAC, so remember, you're moving up pretty aggressively from the open. Your MACD's starting to get a little tired here on the 3-minute. On the 5-minute, starting to get a little tired. You're holding good momentum here on the 3, on the 2, on the 1. It's at 54, which is like the edge point that I look for bulls. Once this sinks 54, especially if it's under a point of resistance, which it kind of is, in this case your flat top, that's where I would get nervous. So actually, this may actually reject right now for zooming in on the 1-minute. If they lose it here in a minute or two, you're also going to break that green SAR fire to the downside. So I would actually say I see what you're seeing, but I respectfully disagree based on what I'm seeing right now. You could establish, like I said, you could establish that long right now. It'd just be tricky to manage unless you're doing shares, like especially in calls, because this will yoink pretty quickly either way. So if you're doing shares, you're going to risk like 20 cents here for potential like dollar. So you have like a 5-to-1, but I just think it more than likely pull down here. Oh, SPY's on the move. A little bit. Check back on that. Eddie says he's here for it. Oh, now we're talking. Hi, everyone. Thanks for popping in the chat. GS over on X says, I'm in a small trade with you, waiting for the pullback. Thanks for the info. You're welcome, man. Hopefully it helps. Hackett says 3-minute candles. Microsoft dropped almost $1 from the highs to SPY move in sync. So that's what I was kind of alluding to earlier. Your Microsoft and your NVIDIA, keep in mind how massive these companies are. That is 15% of SPY as a whole. So if you're looking at Microsoft and you're looking at NVIDIA and how they're moving on the day, theoretically they're moving in sync. It's not going to be a 1-to-1, obviously, but they are, I guess you could theorize that together they are making up a 10th of SPY's movement, or technically a 15th of SPY's movement throughout the day. So if both, that's why I was trying to give you guys a kind of like rough math equation where if both lost 5% in value, the SPY would theoretically drop like 1.25% in the day, which again, 5% drop on NVIDIA and Microsoft in one day is huge. But that would kind of be how like the math would play out. So if you see them both trend one way, you could have obviously that influence seek in on SPY because that's moving 10% of 15% of the entire stock market is through those two names. So moving in sync, I wouldn't use that word because sync would mean they would move together. If anything, keep in mind that SPY, SPX is your basket of your 500, or SPY specifically, it's a basket of 500 of the largest companies in the world. These are just the two largest companies in the entire world affecting it. And by market weight, it is weighed much stronger and much heavier than all the other names. Now, if we include our Mag 7 in there, that bumps up all the way up to 35%. So if all the Mag 7 go down, we'll say 2%. I give myself hard math to do on this show. It's stupid. Yeah, all right. If all the Mag 7 move down 3%, the SPY would move down 1%. That might be right. I don't know. We'll see. All right. I don't like the wicks on the top. Someday, can you do a show focusing on the flat top breakout? I would love to. Let me actually show you one. We'll wait just a second here because my trade could get invalidated here. We will see. And again, to reiterate, the longer we stay up here, now bull argument here is that you're making higher lows, which would support a bull thesis. Bear argument is you're making lower highs. So you can make a little bit of a little pendant here if you like shapes. I don't like shapes. I would argue you're cooking up to You could argue this could even be a flat top, right? There. And then we'll do a quick and dirty like that. Ta-da. Flat top. There's your little quick and dirty flat top. Lower or higher low, rejecting at the same point, breakout. So again, as I've said since the open, if we're above 640-250, this is actually bullish conditions I'm shorting. However, because of how we're sitting and because of the lack of follow through mainly. So if we look at the 5 minute, and really I wish the bears kind of pushed this a little harder on the last 5 minute candle, but we'll see if it works out. The lack of follow through is indicative, again, of like a lowercase n, right? You move up and you start to round out and then you float up there for like 15, 20, 30 minutes. And if you can't break out in that time, eventually the bulls get shut down. And the same thing with bears. If it goes the other way, eventually the bears get shut down. And you saw that yesterday. The bears fumbled the ball. The bears really could have sank this a bit more. Tap, 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 reverse. That's what happened yesterday. And that's what, again, in inverse today, I'm looking at the bulls to drop the ball here to the upside and yoink us down lower, essentially. But now we're near the highs. So like I said, this could still be a losing trade for me. Just being very transparent with you guys. But the risk to reward favors the bears up here. Even though it is bullish conditions above that level, I prefer a short setup. Now you're kind of rocking like a triple top here. Essentially, depending on what time frame you're looking at here. The 200 MA on the 2 minute, on the 3 minute, on the 5 minute, that is a clean area of resistance right now across all three. Especially if you invalidate, so like if we're looking at this as like a potential flat top, right? Especially if you invalidate that by making a lower low, you tend to get a sweep. It's another high on the market here. But again, we give it a little bit of rope, see if there's follow through. As bulls fumbled both times on the follow through attempt here. And where was it? Here. We'll see. This could also be one of those days where we just slow trend to the upside. I just don't think it's likely. Q's getting a hard push here. IWM kind of double bottoming here on the day. And before I close out a trade, especially if it's on the market, so even if this rallies more at this point, I want to make sure, so I'll go back and look at everything and see like what are the odds that I'm actually wrong. And it could be. Or what are the odds that things reverse very short term and I need to just be patient. But it's looking more like the bulls are going to try to pick up the ball and run with it here. But like I said, we give it a little bit more rope and go from there. As we slowly grind higher. Are we back at the... No, we're not at the PPI high. I'll give it one more minute, and if we fail, if we backtest the 8 EMA essentially and don't, if we backtest the 8 EMA and bounce, then it's a confirmed flat top breakout in this scenario. Or if we essentially backtest the flat top and we bounce, then I want to get out too. So they're basically my closed conditions here. 8 EMA, bounce and go, or we backtest the flat top here, bounce it and go. So both those are my two scenarios in which I want to close the trade here for a loss. And that's what I will always do on this program, where a lot of people won't do with you, is walk you through my entire trade, whether I'm right or wrong. I just tend to be more right than wrong. But I at least want to make sure you guys are, you understand the thought process behind it, so that way when you make your own trades, you can hopefully see similar things over time. So we're coming back to the 8 EMA here. Let's see if the bulls can establish the trend. Just wicked it, just barely. IWM is at the lows again. IWM could break here lower. Okay, now we've officially tapped the old flat top, right? This nice red line I doodled on the chart for you guys. 64419 is what I'm calling that flat top level. And now we're under it. So now I sit and I wait again. The 1DT is not struggling. I'm not worried about the 1DT. Worst case scenario on the 1DT, I'm going to take a haircut of like a few bucks, right? I'm back at my entry on the 1DTE at the top of the trade, right? So I'm chilling. The 0 DTE is what I'm more concerned about, obviously. I need to get a nice quick expansion on IV. Okay, look. So now we have given back the flat top. So this is, how do I say this? There's a quote. I don't remember who said it, but someone said it. Obviously, words left someone's mouth at some point. The best bear move and the best bull move are failed breakouts, meaning the best bear move is a failed bull move, and the best bull move is a failed bear move. So whenever either side fumbles the ball, that's where you want to take advantage of it. Now, this is still technically, as you can see this wick, we are now mega tight. You could still call this your flat top, right? If we're using this really rough and dirty trend line here, we're still somewhat respecting that trend line. You got the POC right here. Either side, to be very honest with you guys, is not out of the woods, but I will continue to reiterate, especially with this 5-minute chart, the longer we float in this range, the higher probability of a downside move. Think of it this way. The longer the price stays right here, and think of it from like a psychological point of view, the longer the price stays in roughly the same area, if price moved up there, right, and price just kind of floats around there and doesn't go anywhere, if you're long, what are you going to do? You're probably going to close out your long, and if you want to be a bear, or if you're short, you're probably going to look to open a short, because the market moves in parabolas. We move up and down over and over and over again. When the market stagnates, when anything stagnates, it tends to reverse course, either up or down. Seeing a level of high liquidity just kind of float around here gives me a lot of confidence of a reversal when we don't go anywhere for a long period of time. Now, what matters and what sucks about that in this scenario is with a 0 day, time is not my friend, right? Unless I'm doing a spread, right? Well, at least with a 1DT, I can kind of relax and let it do its thing. I'm still at the money and everything, but the theta isn't something I'm sweating. Now, if we do get a hard breaker confirmation, what I'm looking for here for a failed bull move, obviously this is a first step here. Get the breakout, failed continuation of breakout, retreating back under that trigger level, the big red line on my chart. Now what you're going to look for to actually get a confirmed bear reversal is making a lower low. So basically you can use this as your trigger point here. The low of this candle, 643.70. That also puts you under this. Look at these three EMAs here, or EMAs and MAs. The 200 MA right here on the 1 minute chart, the 50 MA on the 1 minute chart, and your 48 EMA. All EMAs and MAs I use. So the fact that all those are there are going to serve as a very stark, strong support intraday, and that key level here, that 643.70, is going to serve as your trigger point. So here, I'll even put a line in the chart for you guys. 643.70. Boop. We'll make it red. I'll make it nice and big so you guys can see. There you go. Under this, bears take full control. No, full control. Near-term full control. They take control on the 1 minute, the 2 minute, the 3 minute, and the 5 minute chart. All charts I use to day trade with. They dominate them all. You're going to break the green star on the 3 minute. The 5 minute still has a green star, so you're going to yoink that down, break that. The 2 minute has a green star. Every single thing I use for technical analysis would push this bearish. We're wicking it right now. Again, that low, 643.70. We got to 643.71 on that candle wick and moving higher. It won't be an easy break, but if it does break, especially if it breaks on volume, this is getting fired down. Your last hope for the bulls is to catch it here on VWAP, this golden line. Otherwise, this 642.84 is 100% coming. And then 642.50. And 642.50 is then where I'm going to be a little, we'll see what happens. But I'm calling for at least buck 50 to the downside here if this level breaks. Qs are still holding up pretty solid, all things considered. And IWM did just break its low. IWM looking like it could take a bath. That means it goes down. Take a bath. It's good. 3 minute and the 5 minute. Yeah, 2 minutes okay. 1 minute's going to try to hold on. So we'll see. We might get what I like to call a sandwich here, short term. So a sandwich is when you get your short-term EMAs and your long-term EMAs and they converge. So I use these short-term EMAs to establish short-term trends and use my longer-term EMAs to determine long-term trends. So my short-term trends throughout the day give me an idea of which way we're moving intraday as a bull or a bear, like if trend is established or not. And the longer-term ones are basically like your inflection point. So as these shorter ones cross over the longer ones, as your shorter-term EMAs cross your longer-term EMAs and MAs, that can be indicative of trend reversal. So like I said, we have a lot of things basically confirming getting underneath this line, we will get a drawdown. I just put lines on the chart to make it very simple so you guys have specific prices to look at. So I'm just trying to water it down, taking my brain and just kind of putting it out there so you guys can see what I'm looking at in very simplistic terms of red line on chart. Make it super easy. All right, Meta's trying to push up here to the upside. Let's check in on our mag names. NVIDIA, not really. I mean, it did get that break. We'll go back to that 3 minute that Hatchet was talking about. It did get that break. Not with as much confidence as I thought it would get. What's this number again? 183.30. What was on the 5? It's only got, so that 183.30 is a major resistance point on NVIDIA on the daily, and you're only like 80 cents away. So if exposed to NVIDIA longs, maybe now would be a good time to consider at least tightening stops as we get there. You're seeing SPY getting a little burp up here as NVIDIA showing a little bit of strength here, but we're leaving these wicks behind. And it's actually kind of a similar setup, kind of, to SPY's look on the 3 and the 5 minute, where it's just kind of grinding up but getting tired. So unless the NVIDIA bulls can push it and put the market on its back, we're kind of still in the same scenario here. These red lines are kind of messing with my head a little bit. There we go. One was smaller than the other, so it was bothering me. The Qs are near the highs. And IWM got a little bit of a burp here. This is going to be one of those trades. It's just going to take a little while to perform, it looks like. Amazon here is in very vulnerable position. Nice move off the pre-market, though. Off of PPI. Nice little push up here on Amazon. How's my D-Lo doing? D-Lo might take a little bit of a bath here, too. 10B is getting back to that buying range. I can take that same risk. Another 25 cents lower. Let's pop back to the market. And it's like watching paint dry. Come on, give me what I want. I want my money and I need it now. Am I showing my age? Who gets that reference? Once in the chat if you actually get that reference. It's my money and I need it now. So SPY is going to try to break the SAR here again. We'll see, especially if we put in a lower high off of the failed bull move. It is just very grindy. Grindy, grindy, grindy. Let's see, let's see, let's see. If we break that high, I'll at least close the zeros for sure. Because then time, like I said, as the day goes on, time is not my friend. Q's just hit high a day, so watch it hit a double top here potentially. That's where your strength is. IWM is not showing too much strength. It's making lower lows and lower highs. So IWM is trending more bearishly than the market. It really is just the cues here. Oh, getting a little flash in the pan. Who's getting the burp up here? Someone is. Microsoft? Nope. We got a little bump. Unless they all did at the same time. Alright, I'm going to walk on my zeros and keep the 1 DTE for now. So. That's unfortunately a loss on the 0 day. Womp womp. Tom says, is it a wonderful life? No, man. It's my money and I need it now. It's not from It's a Wonderful Life. Come on. I have a structured settlement and I need cash now. There's your second hint. Does that help? I might even take an Nvidia short. People think I'm nuts when I short, like a lot. But there's a certain environments where I short, and even though the market has been pushing more bullishly, shorts are gonna pay you more if you do them right. Hindsight being 2020, maybe I shouldn't have considered a 0 day. So I'm gonna do some post-mortem trading for you guys. So even when I have a loss, I'll talk about it, especially if I have it on the stream. Eddie nailed it. Good job, Eddie. JG Wentworth reference, yes. So this 0 DTE that I took a loss on SPY could be a victim of its own of the time here. I should have probably only got a 1 DTE so I wasn't a victim of having theta decay. Now obviously the trade moved against me. And has been moving against me, but not with like a lot of, again, fervorance. It's not strongly moving against me. It is still slowly trending to the upside, which I acknowledge that's a risk from the start, as long as we were north 640, 250 if you've been watching. So I knew that I was already shorting where it was a little ballsy, and knowing that I probably shouldn't have taken a 0. So a misstep on my part. I think the best traders, at least the people I've met that actually like do this for a living, I've talked to, are the people who are humble enough to admit when they're wrong and then kind of find out why. And I think that was probably what I did wrong in this scenario, where this trade could still work out. To be abundantly clear, this 0 day could still work out. We get to a point where the risk doesn't match the reward, though, right? Where as every second ticks by, especially on a 0 day, if I'm not closer to my goal, then I could actually have a bigger loss, right? Making 21, 22 bucks, or I should say preserving that much money from my original entry of 55 cents. It still puts me under a 50% loss. It's a pretty hard loss, right? But it depends on what you scale in for. For me, that was not a heavy position for me because it's a 0 day. I don't take like a massive size because the wins you make on a 0 day can be dramatically higher. This could go to $2-3, right? If I'm anticipating getting down to 640 on the day, if we break that low, this puts it $1 in the money, depending on the time of day we get there. That puts me at least at 100% gain. Like, in the most conservative math, we tap to 640 because I'm $1 intrinsically in the money, right? So at a 55 cent average, that's almost 100%. So that's good risk to reward. So if I'm risking about in this case, a 50% loss to 100% gain, then my risk to reward's pretty balanced. And that's where I'm taking the walk here, because as time goes on, even if eventually it plays out at 3 o'clock, I also want to leverage my mental capital. And I don't want to sit here all day bag holding a 0 day as it just decays and decays and decays, when I can still hold a similar position that would actually hold more intrinsic value with a 642 expiring tomorrow. So, little post-mortem. What I did wrong, again, probably should have analyzed that this price action was a little slower and a little more, like, it wasn't as aggressive. And I did have an opportunity to trim and I just didn't take it. So that one's on me, I guess. It got up to, I think, 60 cents, right around, hold on, let's see. I was looking at right here and I was contemplating it. 956. 956, that's here. Yeah, 60 cents. I mean, it would have been, about a 5% or a 10% gain. So would would have been something, but not enough for me to like be pretty happy on a 0 day unless I'm looking for a quick move. Like if that was the move I was looking for, it's a different conversation. I was looking for here and I was looking for here, so it didn't fulfill my trade plan. It's okay. Didn't take it. We live and we learn. And that's why I'm trying to share with you guys so you understand what I did wrong, because even though I've been doing this now for, wow, it's actually going to be 14 years? 14 years. Long time, you still make mistakes, right? And you just got to keep telling yourself what you did wrong so you do it less. One thing someone could do very wrong is just full port into a 0 day and not close it out and just hold it till the end of the day, which is something I've done before in the past too. You know, we all make stupid little mistakes. Important is to talk about them and learn from them. And more than anything, especially if you're trying to do this longer term, be humble and know that like one trade doesn't necessarily define you. You can always bounce back and make another trade and make another trade and make another trade. What you can't do is make any trades if you have no capital to make any trades with. That is also an expensive lesson to learn sometimes. If you lose all your money, you can't make any of it back. That is a hard lesson I learned many moons ago. And I'm sure you all have learned on your own trading journeys as well. So now let's reevaluate. Now that we're flipping our risk a little bit here in terms of time. We're not really, I guess I'll keep that there to keep an eye on it just to see how it performs. We did kind of have this flat top breakout. This is very slow price action, which I really wasn't anticipating to get very plodding, as I like to call it, price action here. Through till like 1 o'clock, which is looking like what's on the radar here. I would look at now, I mean, we're here. Essentially, the prior to the PPI low in pre-market area. Wow, that got a little nutty there. So right around where we are right now to serve some level of as a resistance. Look at the 5. Yeah. I'm very confident this is going to turn to the downside. I think I misstepped with a 0 day. That's all it is. If I'm wrong, I'm wrong, as I admitted already with the 0 day. And I'm sure actually, I'm sure if I held on to this, it's just not good for my brain. But I'm sure if I held on to this, this would actually still turn green. My 0 day. I don't feel like it's good for me to say those things, though, because one of you may listen to that and make dumb decisions. So I shouldn't say that. I'm still very confident this 642 is going to pay out more enough to cover that 0 day. Like, very confident. What's our Greeks on this? 29. So what's that math add up to? 30, 50. Yeah. So, conservatively speaking, assuming no delta appreciation, 3160, if we hit my price target, assuming no delta appreciation and no IV expansion, no gamma inclusion, and no vega, so I'm just looking at hard delta on the 642 1 DTE. If we tap my first price target, you're already at a 28% gain on a $2 drawdown. So I'm going to be patient on this one. And the bulls are not giving it up. And also, I'm going to short NVIDIA if we tap 183.30. And if I end the stream, I'll update you guys on X and let you know how and if this trade worked out, to be fair. And if you're in the Discord, you already know I'll keep you up to date. But this is... it's not going to stick. I'm pretty certain. Now, to be fair, again, I'm right most of the time when I take a bear position. Statistically speaking, I'm right 92% of the time. I did have a bad read, though, on, what is it, the Tuesday. I took a short, and it just did this annoying grind up. It never gave any of it back on Tuesday at all, and I was wrong. That was the 8% of the time I was wrong. Yesterday was perfect. Like, literally perfect to the price level and everything. Today, I just think is going to take a while, but it's going to happen still. I just think it's going to take a while, at least at this point. So, we'll see. Anyway, guys, I think that's going to wrap it up. I'm going longer than I normally do, and all we did was make one trade on SPY, so I feel kind of bad about that. We didn't really talk about anything else at all, but interesting day to say the least. I'd be cautious. You know what I will talk about? We're going to talk about risk real quick before I let you guys go. And this is probably the most important thing I will say or do on today's stream. So hopefully you're still here and you're paying attention. Tomorrow's OPEX day tends to be harder to trade. Pick those words very carefully. If you do decide to trade tomorrow, heavily consider buying time. So buying like a 7 DT the following week at least, versus like a 0-day contract. Trading 0 days on a Friday in general is already a little more challenging than normal, than just trading any other contract with a little bit more time. So if you do decide to trade tomorrow, and if you do decide to trade 0-day contracts, keep in mind to actually take profit. I think that's what I'll say. I've seen a lot of people in general on Fridays, they'll get 40, 50, 60, 80, 100, 200, 300, 400% gains. And for some reason, they don't take any profit because they want more and there's so much greed. So if you can temper that greed and if you can control that greed, then trade tomorrow. But if you know yourself well enough, you're a newer trader, whatever it may be, just don't trade tomorrow because you're not going to miss anything. And that's what it's all about, is FOMO. You need to trade every single day because you might miss something, right? And like, okay, you might miss something, but you can't trade again if you have no money. And there's trade setups that I've missed before, but I didn't lose money. I just didn't do anything, right? I just missed the trade. It happens. I think you'll feel a lot happier with yourself mentally if you make smart choices and if you know that you can't control your impulses yet. And some of you are listening to me right now, and this is you, and you don't want to admit it to yourself. But if you know that you can't control your impulses, and you know you should probably admit it to yourself that you probably can't control those impulses, then maybe just close down the brokerage app. Don't even check your stocks tomorrow. Delete the apps from your phone, and just don't look. You're going to get hurt if you don't look. Oh, well, what about all my positions I have open? Set limit orders. Set a price that you're willing to sell them at. Set a stop that you're willing to sell them at, and then move on with your life. The market will still behave as if you pulled the same trigger there. In fact, it might protect you from having another loss where you might FOMO one way or the other. So please, guys, the reason I have these little powwows, these little talks about risk sometimes with you guys is that I've seen many, and I will continue to see many more people fail at trading, whether it's a hobby or they want to do it full time or whatever. I see them fail because of their own hubris, like their inability to control themselves. That's why you see a lot of people who are successful at trading tend to be in shape. And that's not a shot at any of you that aren't, but a lot of people who tend to be good at trading tend to work out. They tend to run a lot, or they lift weights, or whatever. They're some sort of athlete, because that sort of thing requires a lot of determination. It requires a lot of discipline. If you don't have discipline, then you probably can't be a good trader. And you can't go to the gym. You can't wake up every morning to go to the gym or whatever if you don't have any discipline. Same thing with trading. So, a few things to chew on for you guys. If you can acknowledge that you don't have that perfect little setup in your head, and you're still working on it, and it's okay wherever you are in your journey. Some people pick this up in 6 months. Some take 6 years. It took me at least 5 years to really actually start to learn things, right? If it takes you that long, it takes you that long. It might not, but understanding those things is very crucial to your long-term success, and that's always what I want from all of you right here on the Atomcash Angle. And with that, I bid you adieu. Enjoy the rest of your week, and some will tell you that you may need an extra trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash Angle. Have a great rest of your week, guys. Make smart decisions, and I will see you next week. Before I go, I will update you on X. So if you don't follow me on X, go follow me on X. All the stuff is that way. On what this trade ends up being. I haven't closed it yet. I won't close it yet. 642 puts for tomorrow at a 125 average, and I'll let you know what happens. And with that, I bid you all adieu. Stay tuned to my X account as well as on YouTube. We're going to do more streams. streams are going to be a little bit less organized just for a little while, guys. I am doing a lot in my personal life at the moment. So I want to make sure when I am streaming, you guys have like my full focus. I'm not distracted by doing other things. So I got a lot going on in the background right now. That's going to change in a few months. But until then, I'm going to still try to put on shows for you guys, still try to do live streams for you guys. So appreciate any little support you can throw my way. And as I'm trying to leave, the market's just telling me to F off. So I'm going to do that. Enjoy the rest of your day, guys. I will see you next time. Have a great weekend.
The time has passed, and that's a wrap. You're